Good morning, guys. Welcome. It's Sunday, July 11th. My name is Dave Coker, and this is the week ahead. You know the routine, 7 slides, 7 days. Again, we got 8 slides. Lucky you. All right. Just, my buddies and I chat about the markets a great deal. And this is one that is really interesting that came over from Daily Shot, not my research, not my buddy's research, but we just share things back and forth. And this is consumer credit in the United States. And there's a real surge, a huge surge, a record surge in consumer credit that's been taken out over the past month. Absolutely incredible. Now, people are borrowing heavily because of consumption. People need stuff, don't they? And those without readily available cash can consume too through the magic of credit. Now, even though I don't like debt, this is sort of okay when the economy's performing well and work's available. But what happens when we see another recession? That's the problem. And that is something that should concern people, especially people that are borrowing heavily and maybe financing frivolous purchases, things that they don't need, but things that they want. So that's a big problem coming up. And speaking of problems, this is a really good one. I did share this one with my buddies. Now, electronic payments surged during the pandemic. And what's happened, guys, with electronic payment? And I'm a real atavism. I walk around with a pocket full of cash, try to pay cash. Just had cash refused yesterday, actually, at a cafe or a pub we went to. They weren't taking cash. They'd only take money electronically. Now, electronic payments, as we know, surged because they tried to discourage people from paying cash. What's happened, if you think about this, the pain of paying has been disconnected from the pleasure of buying. And there's no doubt that buying things is pleasurable, and there's been studies showing that some people have real problems with this because it stimulates endorphins in the brain, and it can be addictive. So now you got this magic money, invisible money as the author describes it, and I don't know if this is going to end well. People really do need some degree of self-control about this stuff because your life can be totally destroyed by debt. And talking about life and being destroyed, this is interesting because we've had zombie firms before. And just as an aside, I like zombies. I mean, who doesn't like zombie movies, right? They're the best. They're the absolute best. But zombie companies are something completely different. A zombie company, by definition, is a firm that if it were not for the ultra low interest rates, they'd be bankrupt. In other words, they're just not really making the money to stay afloat. Well, rates aren't going to stay low forever. What happens when interest rates go up, when what we call in finance, when they mean revert? They're going to go up, and at some point, I'm just not sure when, right? These companies won't be able to service their debt. And we've seen this play out before, guys. Corporate bankruptcies, once interest rates start to rise, will surge. So you got to make sure that the stocks you're buying, the companies you're investing in, have adequate cash flow and can service their debt. Because we're going to see increases, just a matter of time. The way inflation's surging, it could be sooner than some people think. And this is an interesting one, the way the media got this totally wrong. I've written stuff for CNBC. I don't know how, this is an odd headline. I just find this very offensive because it's just pretty obvious. The way inflation's going, guys, it's running up. We're going to see some wage increases. We're definitely seeing them now. There's a couple factors there going in. They have to raise wages to draw people back into the labor force. But then we're also seeing workers getting their increases that they deserve. So a little message to CNBC, you never recover from inflation for a couple of reasons. First of all, historically, wage increases have never kept up with inflation. They just don't. And second, this is the real painful part, wages increase discreetly, typically once a year. Prices change in real time every week, if not every day. Prices will adjust. So no, you won't recover. If you do get a raise in, say, 12 months' time or 11 months' time, it's little consolation if inflation has been running hot, say above 4% for a year. You've lost a lot of money. And that's an issue. Now, you do need to invest and you do need to save, obviously, and also I'm very aggressive with substitutions, and well, I tend to make everything that we eat from scratch anyways, but still I try to substitute if necessary to try to make sure that I hold to my budget. And boy, if I gotta raise the budget, I just tell the wife we ain't gonna eat that much. No, I don't do that, but yeah, you gotta manage your money better. But still, guys, if you're investing properly, if you're holding stocks, and I am, then everything might be okay. Why? Why? You can always sell some stock, I guess. I think there's a real problem if you're selling stock to eat. You got to watch that. Here's an interesting one off Investors Intelligence. They survey investors periodically. We see bullish investors at multi-decade highs. This is wild. Look at this. You have to go back to the late 1970s to see bullishness as high as it is now. It's really wild. So you must know what that means. Yep, you're right. A crash is coming. It'll likely be about 12 months out or so. This just isn't sustainable where everybody's a bull and everyone's buying and prices are just rising. It's all about making money, isn't it? And we're all going to be making some money. Now, this is really good. I tell you, this is really funny. This is from the US. It's an 856 area code. Buddy sent it to me. And it's from an area of New Jersey. It's rural New Jersey, and it's out near where I used to live out this way when I was working at Bell Labs. And it's wild. Someone is selling, and this is out in the country, guys. This is tacked up on a pole out in the middle of nowhere. Somebody's selling training, options training. Oh my God, absolutely amazing. And I'll tell you, yeah. I don't think you want to trade options, maybe buy. Well, we won't get into that. They're just not things you want to be trading. My God. Although that being said, I do trade them. But I think, I don't know about somebody just seeing the sign and hearing about options and wanting to trade options and learning how to trade options. So business is good, though. I called the number several times over the past week. I always got voicemail, and the voicemail was always full. So I guess he or she's out there training people to trade options, because I couldn't leave a message. Oh, I wanted to talk to them. I wanted to see what they taught. And I wasn't going to be nasty or anything about it like that. I just was very curious how you can, what's the training? What are you doing? You're just looking at some charts and saying buy? I don't know. It's an interesting one. I doubt they're teaching what we call Black-Scholes valuation and how to price an option using the Black-Scholes partial differential equation. And then from there, determining whether you should buy or sell the option. I don't know if they're doing that much, but I honestly don't know because I couldn't reach the number. But it's just very curious. And it shows how this bubble that we're in right now, everything's in a bubble. And we heard about retail investors getting into options. And when we talk about Bitcoin, because we talk about Bitcoin all the time, don't we, right? Yeah, I'm very focused on Bitcoin in many ways. But in any case, this is off Coin Metrics, and they've got a lot of different facilities there. One is you can look at the amount of wallets, the number of wallets, I should say, that have less than $1 in them. Well, if they've got less than $1 in them, it's pretty safe to assume that they're abandoned. And I'm probably responsible for, I don't know, maybe 1,000 of them, primarily because at university, I'm well known when I give presentations on cryptocurrencies. I do give students Bitcoin wallets, paper wallets, that they can learn how to extract the value from the wallet. And I have no illusions, guys, because I've handed them out in rooms of like 100 students. And then after the presentation ends, I go back and look around, and sure enough, there's a bunch of wallets. They just left them. They don't care, right? Yeah. But in any case, guys, it's interesting. Now, that I started buying Bitcoin again. I mentioned to you guys, I stopped in December 2019, and then I just picked up recently, and I've been doing my usual approach, Fridays. Every Friday I'm buying, and I may mention here when I stop buying, I'm just going to keep buying because I do know over the long term, the price of Bitcoin will be higher, and I suspect much higher than where it is now. And that'll be cool because, you definitely got to get into that game if you're interested in building wealth. Bitcoin is a wonderful opportunity, but it's highly speculative, highly risky, and therefore we hope the rewards will be high as well. And the final thing, this is a presentation I put together earlier this week for my clients. I was looking at the labor force participation rate in the United States. And you can see here, guys, that's the blue line. You can see the effect of the pandemic. On the right-hand side, that yellow shaded area is the pandemic. And we can see labor force participation drop like a rock. And now it's coming back. And if you take a look at the red line, the red line's actually moving up in a very good way. So we're starting to approach pre-pandemic levels with the red line. But take a look at that green line. The red line reflects workers 25 to 54, younger people. The green line reflects workers that are 55 years and older people, and the older workers just aren't going back to the labor force. Now, there's some reasons for this, right? First of all, a lot of the older workers are just retiring. Let's face it, guys, if you're much above 55, say if you're about north of 60, and the pandemic may have just accelerated your plans to retire. And unfortunately, and this is well known, guys, the longer you're out of the labor force, the more difficult it is to re-enter for many reasons that are well documented. So some of these people have been on the labor force perhaps for 18 months, and they just are not getting back in, even though they may want to get back in. And also, there's just a lot of people just retiring. Figure it's time. A lot of my friends, for instance, are retired. I'm 64, going to be 65 soon. So I'm not retiring. I got plans to work until I'm 70. They're pretty much organized right along those lines. But and I could have. It's not because I need the money or anything. I could have retired in 2002 because of the property business and especially the family office. But I didn't. A lot of my friends are retiring and they're hitting Social Security perhaps, or even their private pension. I'm not going to do it. I could retire and get Social Security. And I'm actually eligible for a British pension as well, but I'm certainly not going to do that. I'm just going to keep working. But it's really interesting when you look at this. Now, there is a silver lining because Americans are optimistic, and I always try to look at the bright side. What this means is that a lot of opportunities for millennials and these other groups are going to be opening up because the older staff just isn't going to be there, or they're not going to be available to fill those jobs, and they're going to give opportunities to younger people. So that's fantastic. So older workers, we thank you for your sacrifice. Okay, guys, that's it for this week. I hope you enjoyed the presentation. Once again, really interesting week coming up. We had a lot of volatility last week, Thursday in particular. I was buying stocks heavily on Thursday. I don't know if you were, but I definitely was doing a lot of buying on Thursday. And we know that the run up over the past, say 10 days has been pretty positive. Last week was a little bit of a wobbling. So I think we're going to see the markets really tend to advance. Might be wrong there, but I'm not selling stocks. But in any case, have a good week. Have a profitable week. If you've got capital, start to look for opportunities to put it to work. You know the rule, guys. The bulk of my capital is in dividend-paying stocks. I don't buy anything unless I'm paid to hold it. The only two exceptions are gold and silver. I've got big positions there. And Bitcoin. All right, guys, take care. You're going to have an awesome week.